Hi, everybody. Welcome back to Ox Talks. It is Wednesday, April 10th, 2024. Hope you all are having a productive day thus far and a good week. I want to start by thanking you for subscribing to this channel, watching the videos, and spreading these as far as wide as you can with people that you know and love. The situation economically is deteriorating rapidly. We're going to cover some really important stories today and some data. But look, this thing is going to get worse. We're going to start seeing more bad economic news, more market sell-offs, in my opinion. And so everyone needs to be paying attention to this. No one's immune. If you have millions of dollars in the stock market and you believe that you're well enough insulated, you have to be watching what's happening, because if the momentum gets going to the downside and if the sentiment continues to turn badly, not just for mom and pop and not just for small businesses. We're going to cover that story today as well. But if the market sentiment starts to change and if this 10-year bond yield continues to climb, we have some real problems. I'm seeing a reduction again in the number of subscribers. Again, maybe it's normal stuff for subscribers to simply decide that they want to unsubscribe from the channel and no longer watch the content. Maybe I say stuff to 15, 20, 30 people that they don't like or they don't agree with. But that seems to me lately again, we crossed over that 6,400 mark, and now we've pulled back 15, 20 subscribers. So again, please just check to make sure you're still subscribed. Thanks for all of you being here. Let's jump right in. There was a pretty healthy market sell-off today. The Dow, the S&P, and the NASDAQ all sold off around 1%. Is this just the beginning of a broader sell-off? We'll have to see how this plays out. But the markets got dealt a real dose of reality today when the CPI report was released. It showed that inflation month over month and over the last year, as of this month for March, has gone up. It's not coming down. And so all of the cheerleaders and all of the market pumpers that have been out there saying that rate hikes are on the way, rate cuts are going to happen, that everything is going to be fine, there's going to be a soft landing, there's going to be no recession, I think some of them are now starting to wake up to the reality. And it probably always was the reality. It's just that people create the narrative that they want to hear to reinforce their own BS, I think is what it really is. Let me start with an article today. You can go to the Zero Hedge. They did a good breakdown of the actual inflation numbers and what it was, what was expected. But I thought there was an interesting article from CNN. Normally, I'm not a CNN. I don't watch CNN. Normally, I'm not a fan of the way they spin news. But I'm going to share with you this article today from CNN. And it says, with inflation back up, the long-predicted storm clouds in the economy may actually be forming. And it's rare that CNN actually will sometimes come out. Well, it's rare that they will come out and actually give a true picture of anything. Their goal is to shield, obviously, the current administration and make everything appear as if it's fantastic. So again, the article says, this is out of New York CNN. Progress on inflation is moving in the wrong direction. The latest consumer price index released Wednesday showed that annual inflation ticked up to 3.5% in March from 3.2% in February. That marked the largest annual gain in half a year. And I believe that it's the fourth straight month that core CPI has been hotter than expected. So what were the items that rose the most? I don't think it'll be a surprise to any of you that energy, meaning gasoline costs, and shelter costs were the two categories that led the largest gains in inflation for March. So even though the current inflation rate is better than last March, that was a 4.9%, so we're going back a whole year to compare it to that size of a gain. It says it signifies the highly anticipated rate cuts investors were banking on may not come this year. And that is why the market sold off. It's repricing in, from my perspective, the reality that rate cuts may not happen. And we're going to get to some information here that actually may result in further rate hikes. It says now instead they may need to brace for another rate hike as interest rates stand at a 23-year high. This could mean that many influential leaders and economists who long predicted storm clouds and a hurricane hitting the United States economy may finally be right. Chief among them is JP Morgan CEO Jamie Dimon, whose annual shareholder letter this week highlighted persistent inflationary pressures. He also expressed skepticism regarding whether the economy will achieve a soft landing where inflation continues to cool without causing an unemployment spike. And look, he was out several days ago, Jamie Dimon, giving these warnings. This is several days before the CPI numbers were officially released. You think for a second these guys don't know what's going on behind the scenes. They absolutely do. Federal Reserve officials shared Dimon's concerns, this article says, leading some to question whether any rate cuts should happen this year. Starkly contrasting the median forecast of 3 cuts they made at last month's meeting and first signaled back in December. But potentially persistent inflation isn't the only red flag in the economy right now, the article says, leaving the door open for more rate hikes. Says Fed Governor Michelle Bowman said last week she's even willing to consider raising rates should progress on inflation stall or even reverse. For now, she doesn't think there's a high likelihood that hikes will be merited. That was a week ago. I saw something earlier today. Former Fed Chair Larry Summers came out, did an interview with one of the news stations, and he said that the Fed very well may have to raise rates before they before they begin pausing or reversing. So this is sentiment is shifting. And once this thing starts to catch fire to the downside, do we even know where a bottom is? The market's been run up so fast over the last several months on this hopium that rate cuts are on the way. Rate cuts are on the way. So in one word, the report was discouraging for the Fed and the prospects of a June cut. Bank of America economists said in a note published after Wednesday's CPI report, inflation is providing sticky. Remember when we were told 2 years ago or so that the inflation was just transitory? Janet Yellen was out there saying that. Jerome Powell, it was just transitory. And look at us now. I'll tell you, this is also going to have a massive impact, folks, on the mortgage rates, because the 10-year Treasury today went back above 4.5%. As of the time of me recording the video, I checked it, and it's at 4.54%. So, we're probably going to see a repricing of the 30-year mortgage in the coming days. And how is that going to further cool an already cooling housing market? I think it's going to happen. Consumers, it says, aren't confident in their ability even to make one-time debt payments. We've talked about the lack of health of the consumer in this country, the debt levels that most consumers carry, the credit card debt they're paying at 22% interest. This says higher inflation is also weighing on consumers who are shouldering a record level of credit card debt. And the highest share of consumers since the onset of the pandemic said they're unsure if they'll even be able to make a minimum debt payment on time, according to the New York Fed's monthly survey of consumer expectations that was released on Monday. Across all age groups, the uptick was most profound, listen to this, among 40 to 60-year-olds. That's significant because that cohort is experiencing an even lower unemployment rate than the nation overall. So you know what else is falling in confidence is small business confidence. I want to shift to that. There's an article released yesterday or put out yesterday that I saw in the Zero Hedge, and that's entitled U.S. Small Business Optimism Slides to, listen to this, 11-year low. It says confidence among U.S. small businesses has fallen to the lowest level in more than a decade. as the future path of inflation remains a significant concern. So small businesses are vital to the economy. We know that. I'm out here preaching that all the time as a small business operator. This is contributing to 44% of the country's economic activity and creating 2/3 of net new jobs. I'd never heard that statistic. Small businesses in this country create 2/3 of net new jobs. It says the National Federation of Independent Business, NFIB, reported Tuesday that its small business optimism index declined 9 points to 88.5, the lowest level since the second half of 2012. This is or about when the U.S. economy climbed out of the worst financial crisis ever. 25% of business owners identified inflation as the largest issue plaguing day-to-day operations, highlighting the impact of increased costs for inputs and labor. This represents a 2-point increase from February. Additionally, the proportion of businesses that have increased their average selling prices went up by 7 points compared to the previous month. That means the prices that you and I are paying for what these small businesses are providing, whether it's services, whether it's goods, whatever it is going up substantially. Owners continue to manage numerous economic headwinds. Bill says Dunkelberg, the group's chief economist, wrote in a statement as quoted on Bloomberg or by Bloomberg. And this guy says inflation has once again been reported as the top business problem on Main Street. The worsening sentiment among small business owners directly correlates to the rise in consumer prices in the first 2 months of this year. And again, this article or this report or that came out, this new Federation of Independent Business panel, it's from yesterday. So it was before the CPI numbers were even released. So obviously it confirmed that the consumer prices continue to rise and impact small business operations. Last week, the NFIB reported that small businesses hiring plans in March were the shockingly weakest since May of 2020. This report is a major concern, it says, considering small firms are the economic engine of the economy. The gloom among small business owners is an ominous sign that the U.S. is on shaky ground. So again, people that have been piling into the stock market over the past few months, believing all the cheerleaders, thinking that they can go out and take on new debt, run up new credit cards, pull out a new mortgage for their house or refinance their house on this line of BS that don't worry, you'll be able to refinance into a lower rate quickly. That's where everything is heading. I think are in for a very, very, very rude awakening. Hopefully you're not one of those that fell into that trap. If you are, it might be time to take stock of where you're at financially and what are your debt levels, what are you doing to try to pay down that debt. Yes, but most importantly, not take on new debt at this point in time. Pull back, put some cash on the sidelines, have some reserves. The last article I'll share with you today was just more of an update from something I covered, I believe, on a show about 2 weeks ago that a friend of mine shared with me from that really high-end manufacturer of home appliances and things of that nature. The name of the company is Perch, P-I-R-C-H. And some story came out a couple weeks ago that Perch had abruptly closed its doors in all of its locations. And the locations were mostly in Southern California in higher end, higher income, higher net worth towns and cities. And there was some testimonials from people who said they had paid for product, paid for custom units, custom appliances, or made deposits, and had not received any word on what was going on with those items. So here's an update. This is from Yahoo Finance. It came out on Monday. It says, this is out of San Diego, Fox 5. Customers from upscale appliance retailer Perch are continuing to come forward after the store abruptly closed in late March. It says it was this is a quote from a customer. It was a custom grill from Kalamazoo that we ordered through Perch. So all of the specs are dialed in specifically for that grill. said Brea Reed while showing Fox 5 around the renovation in her backyard. Reed and her husband Keith have been anxiously waiting for the moment they could finally install a new grill in their backyard, which was ordered about a year and a half ago. And here we go. This is not a cheap Weber grill. You throw some charcoal briquettes in, folks. She says, quote, it's not like it was just $500. We're talking about $25,000 here, and nobody's responding, Reed said. By the time Reed contacted Perch hoping to pick up the item, she learned that they had just closed. Following the closure, a lot of lawsuits, it says, have been filed against Perch for unpaid rent. Last week, dozens of customers came together for an online forum hosted by a local design business who feel cheated and ignored. It says initially, Reed said that she was relieved the company would find a way to rebound. That was the company's initial kind of news releases that, don't worry, we're just restructuring, we're not going anywhere. It says, of course, quote, of course they're going to reach out and give us what we paid for. And then it wasn't until I started talking to other designers that said they're likely going to go bankrupt and probably repossess items. So that is a development now. It says Fox 5 tried getting in touch with Perch since last week and has not received any official response. However, a current employee did speak with them anonymously. So the higher-ups at Perch are just staying quiet. People aren't getting their merchandise, not getting their deliveries, custom expensive orders of appliances and things, and they're leaving their customers, they're leaving their employees, leaving their designers simply in the dark. It says they said they've been asked, so this employee now is speaking anonymously. They said they've been asked to start taking time off since last week in order to get paid. The employee also said within the company they're hearing Perch may file for Chapter 7 bankruptcy, which does not involve a plan to repay, instead a liquidation of assets. A Chapter 7 bankruptcy is a no asset bankruptcy, although Chapter 7 typically relates to no asset individual bankruptcies, so I don't know if that's an accurate statement, but it means they're going to liquidate. There's going to be no, I bet a lot of people that ordered $25,000 barbecues are going to be stuck. Hopefully, you only paid a deposit on those if you're one of those victims from Perch and didn't pay for the whole item up front. 17 and a half minutes. I'll leave it there today. I'll be leaving in about an hour to get my workout. I'm going to have a dinner with the family tonight. And let's continue to, every day I talk about on the show, well, every show I do actually, we talk about working out, getting your steps in, moving, staying active. So important we do that. I'm doing it. I really hope that all of you are as well. Continuing to work on your physical health, your fitness, and your overall well-being and your immune system, which are all things that benefit when you keep a consistent, fairly active routine, including exercise, strength training, and a really strong diet. Be careful about what you eat, how much you eat, watch the portions, watch the hidden fats and dressings and things of that nature. Appreciate all of you. Thanks for the comments. Keep sharing. Have a great evening. I'll see all of you probably tomorrow, if not on Friday. Great. Bye.